Alright, let's talk about something fascinating today. What if Warren Buffett, the legendary investor, was starting his journey in 2025? What would he do differently? What would he keep the same? And most importantly, what can we learn from it? First, let's get one thing straight. Warren Buffett's success isn't just about picking stocks. It's about discipline, patience, and a mindset that's built for the long game. If he were starting in 2025, those principles wouldn't change, but the world around him would. So, let's break it down. 1. He'd still focus on the basics. Warren Buffett's core philosophy has always been about value investing. He looks for companies that are undervalued by the market, but have strong fundamentals, solid earnings, good management, and a competitive edge. In 2025, that wouldn't change. He'd still be looking for businesses that he understands, with a clear path to profitability. But here's the thing. In 2025, the market would be even more complex. With AI, blockchain, and other emerging technologies, the landscape is evolving rapidly. Buffett would likely stick to industries he understands well: consumer goods, insurance, and maybe even some tech companies that have proven their staying power. He wouldn't chase trends just because they're popular. He'd wait for the right opportunity, and when it comes, he'd go all in. 2. He'd adapt to technology, but not be ruled by it. Let's be honest, technology is reshaping the world, and investing is no exception. In 2025, Buffett would have to adapt to tools like AI-driven analytics, algorithmic trading, and even decentralized finance. But here's the key. He wouldn't let technology dictate his decisions. Buffett has always said, "Be fearful when others are greedy, and greedy when others are fearful." In a world where algorithms can trigger massive sell-offs in seconds, Buffett would likely use technology to gather data. But he'd still rely on his intuition and experience to make the final call. He'd understand the tools, but he wouldn't let the tools control him. 3. He'd double down on learning. One of Buffett's most underrated traits is his insatiable curiosity. He spends hours every day reading annual reports, newspapers, books, you name it. If he were starting in 2025, he'd likely spend even more time learning about emerging industries and technologies. But here's the twist. He wouldn't just read for the sake of reading. He'd focus on understanding the why behind things. Why is this company succeeding? Why is this trend gaining traction? Why is this technology disruptive? He'd dig deep, ask questions, and only invest when he's confident he understands the bigger picture. He'd be patient, even in a fast-paced world. In 2025, the world will be moving faster than ever. News cycles will be shorter, trends will come and go in the blink of an eye, and the pressure to act quickly will be intense. But Buffett wouldn't budge. He'd stay patient. Buffett's famous quote, "The stock market is a device for transferring money from the impatient to the patient," would still hold true. He'd ignore the noise, avoid impulsive decisions, and wait for the right moment to strike. In a world obsessed with instant gratification, Buffett's patience would be his superpower. 5. He'd build a strong mental framework. Here's where things get interesting. Buffett's success isn't just about strategy, it's about mindset. If he were starting in 2025, he'd focus even more on controlling his emotions and staying disciplined. Think about it. The market in 2025 would be volatile, unpredictable, and full of distractions. Buffett would need a rock-solid mental framework to navigate it. He'd practice mindfulness, stay grounded, and avoid getting swayed by fear or greed. He'd remind himself daily that investing is a marathon, not a sprint. 6. He'd surround himself with the right people. Buffett has always emphasized the importance of surrounding yourself with people who are smarter than you. In 2025, He'd likely build a team of experts in technology, data analysis, and emerging markets. But he'd also keep his inner circle close, people who share his values and long-term vision. He'd listen to their advice, challenge his own assumptions, and make decisions based on collective wisdom. He'd understand that no one succeeds alone, and the right team can make all the difference. 7. He'd stay true to his principles. At the end of the day, Buffett's success comes down to one thing: his unwavering commitment to his principles. Whether it's 1965 or 2025, he'd still believe in the power of compound interest, the importance of intrinsic value, and the need to think long-term. He'd remind himself that the market will always have ups and downs, but over time, quality investments will prevail. He'd stay true to his mantra: price is what you pay, value is what you get. 8. He'd give back. Finally, if Buffett were starting in 2025, he'd likely focus even more on giving back. He's already pledged to donate the majority of his wealth to charity. And in a world facing so many challenges, climate change, inequality, and more, he'd see it as his responsibility to make a difference. He'd invest in sustainable businesses, support social causes, and use his influence to drive positive change. He'd understand that true success isn't just about wealth, it's about impact. So, what can we learn from this? If Warren Buffett were starting in 2025, he'd face a very different world, but his core principles would remain the same. He'd adapt to new technologies, stay patient, and focus on long-term value. For us, the lesson is clear. Success in investing, or anything in life, isn't about chasing the latest trend or trying to outsmart the market. It's about discipline, patience, and a commitment to continuous learning. It's about controlling your emotions, staying true to your values, and surrounding yourself with the right people. So, whether you're investing in 2025 or just trying to navigate life, take a page out of Buffett's playbook. Focus on the basics, stay patient, and never stop learning. Because at the end of the day, success isn't about timing the market, it's about time in the market. And remember, the best investment you can make is in yourself. So, keep growing, keep learning, and keep pushing forward. The rest will take care of itself.